Thanks, Guillaume, and welcome to OnChain Reaction. I'm Philip Gradwell, the Chief Economist at Chainalysis, here to take you through what happened on the blockchain last week. Now, last week was obviously the week before the halving, so an exciting time for the markets, and it really looked like people were really engaged with Bitcoin that week. The price was actually at a high that we haven't seen for a very long time, the 14-day average way above the 200-day average. There was a fall on the Sunday, but throughout that week, we've seen prices we haven't seen for a long time. In terms of the Bitcoin flowing into exchanges, that too was at very high levels, really reflecting the interest of Bitcoin and really the opportunity to sell at those high prices. The fact that the price remained high, even as we had these large inflows, really suggests that demand was strong ahead of the halving. There were a couple of interesting things in terms of exchange inflows last week. The first was a lot of the inflow was actually towards the back of the week. Normally we see it a bit more smooth through the Monday to Friday. Last week there was a lot more Bitcoin coming in on sort of Thursday and Friday than we'd expect. And then also there was a big influx of Bitcoin on the Sunday when that price decline happened. It's hard to see causality. Perhaps people were sending Bitcoin after the price fell, because it did happen very quickly. But it shows that these on-chain flows, they're really reflecting the market trends. And we can see it's not just a story about the inflows. It really looks like there was a tight market last week. We can see that because the number of Bitcoin traded for every Bitcoin that entered the exchange on the blockchain actually edged a bit higher. So that suggests that there was a greater demand to trade Bitcoin than actually Bitcoin flowing into the exchanges. So ahead of the halving, really quite strong demand. And we can see that if we look at the flows between exchanges. They've been higher than they have been over the last month on average. And we've seen a continuation of a trend that we saw last week. In fact, it's got even stronger. This week, the amount of Bitcoin flowing from crypto to crypto exchanges to crypto to fiat exchanges increased. There's actually a doubling of the net flow between them, meaning this week $467 million went from crypto to crypto exchanges to crypto to fiat exchanges. So that's people really taking some profits. And if we look at the flows across the world, across the geographic regions we have, well, we can see that they continue to increase as well. And interestingly, that Bitcoin continues to move from East Asia to North America. There was a net flow of $165 million last week from East Asia to North America. So overall, a lot of activity on the blockchain last week, ahead of the halving, lots of Bitcoin being sold, a lot of it going to crypto to fiat exchanges to cash out. And this raises a big question. What's going to happen after the halving? Well, people are worried about the reduction in supply. It's about 900 Bitcoin fewer a day now being mined than there were last week. I actually don't think that is going to create such a big problem in terms of supply. The reason why is because there are many, many millions of Bitcoin that have been mined, and 11.4 million of those are actually in the hands of longer-term investors. How do we define that? Well, we define that as wallets that have never sent more than 25% of the Bitcoin that they have received. And they account for 3/5 of all mined Bitcoin. So if there is going to be a reduction in the Bitcoin coming from the miners, I believe that there will be some long-term investors that when they see a high enough price, they'll send their Bitcoin to exchanges to sell it, therefore making up for that reduction in supply. It's interesting to note that there's other Bitcoin that's held by different types of people. In particular, we think that there's 3.7 million Bitcoin that have been lost. 1 to 2 million of those belong to Satoshi. The rest, it may not necessarily be lost, but it hasn't moved for many years, even as the price has increased significantly. So I don't expect that to come to the market anytime soon. There's another 3.4 million Bitcoin that is actively traded. So this moves on the blockchain very frequently, often in and out of exchanges. And the charts I walked you through just now are really about what's happening with these 3.4 million Bitcoin. And so the big test that we want to look for in the coming weeks is how many Bitcoin will move from those investment buckets and end up in that trading bucket to counter the reduction in supply due to the halving. So in summary, demand was strong ahead of the halving. Though since then, the price has really moved sideways since Monday. And that's interesting because exchanges have actually seen no let up in the amount of Bitcoin flowing into them. So that suggests that, that price level, it's perhaps a little unstable. If demand were to drop any further and supply to keep coming in, I would expect to see a price fall. But at least for days this week, the market has been able to soak up that extra supply coming in. And, with this decline in mining of around 900 Bitcoin a week, for me, as I said, that big question is, are the long-term investors going to send their Bitcoin to exchanges to make up for that shortfall from miners? And at what price are they willing to send it in? So that's on-chain reaction for this week. Over to Tina.